Let's straight away welcome in Navneet Munot, who's the Managing Director and CEO at HDFC Asset Management. He's with us here in our studios. Navneet, great to have you with us here. Thanks very much.
Entirely my pleasure.
Long time. What took you so long?
Really long time.
First of all, greetings on the Ganpati Utsav.
Same to you.
We are entering the festival economy, wedding economy, and a winter economy. And I will get the GST gift during that time. So hopefully this will turn out to be a very auspicious time for the economy also.
Oh, absolutely. And hopefully somewhere in there, these tariffs also get negotiated lower. I mean, sooner rather than later.
More than the tariffs, I think the world is moving from a unipolar world to a multipolar world. And everybody in the world is recognizing. You pick up global media and you can see the front pages pictures of our Prime Minister with the global leaders. And India clearly as the center of the world in which direction it is moving. So mother of civilization, the largest democracy and the future of planet is clearly going to drive and play a very, very big role in the world that we are going to witness in this century.
That's a super charged up, and that's the way to be, right? I mean, you got to back yourself.
No, clearly, I think last few days we have clearly seen, I think the institutional degradation that has happened in US and the way India has responded, I think 1.4 billion people are very proud of that.
It's come to a pass, Navneet, that even US media, which typically would be completely against, would back the Republican administration, Trump administration. I mean, most of it is now saying, well, this has gone too far. I mean, you're antagonizing one of your oldest and strongest allies in the region in terms of India. So I think there is recognition in the US as well, but I think it's just one man who has to...
I think they forgot that Peter Parker in Spider-Man, with great power comes great responsibility. I think if you are a great power, if you are a reserve currency of the world, if the whole world is trusting you with their money, it comes with great amount of responsibility. I say this to entrepreneurs also. When you raise public money, it comes with great responsibility. You are a trustee. I think same is true for United States as a country.
But Navneet, I completely take your points on the global stage. I think that picture, the all smiles picture with Mr. Xi, Mr. Putin, the handshakes, I think Washington took very serious note of it.
The Japan has not been as many pictures, but if you ask me, I think they have the technology and they have capital. India has talent and the trust capital. I think together it could be a defining relationship of this century.
Absolutely, absolutely. You know, but now from global politics and geopolitics coming down to the here and now, and I want to get your thoughts on the way the market has reacted to a series of events in the last three, four weeks, I think. And good things have been announced. I mean, that GDP number, 7.8%, GST cuts. But the reaction has been, I mean, euphoria is a very big word, but even otherwise, I mean, there's a sense of disbelief and despondency and that, you know, it's still ambling along. Best case is, chalo, market gir to nahi raha hai. What have you made of the way the market is reacting to what could be big changes? You yourself started by saying that on GST.
But don't you think market has been having a very good belief? There has always been this saying, and this is like Teacher's Day 2 days later, that whenever your driver gives you a tip, that's a time to sell the market. Now I tell people my driver has been doing the SIP. He's not giving the tip. And he's the one I look up to now.
No.
And the whole world should look up to. I think he's been right last couple of years, just kind of maintaining the faith in the market and not paying too much of attention to the noise from rest of the world.
So from the tip to the sip, that's the transition of the Indian market.
Navneet is dropping all bombs today. I mean, that's a nice one. I've never heard it before.
Superb.
But I've always said that this nation, this is underestimated. And Prashant, we discussed when I think SIPs crossed 4,000 crores, that I think this nation is transforming from a nation of savers to nation of investors.
Right.
And that 4,000 crore a month has become 28,000 crores a month. And we have seen COVID, we have seen Russia-Ukraine war, we have seen Israel and Middle East, we have seen like oil prices going up, coming down. We have seen many cycles, rates going down, going up, now coming down again. But I think this is a very, very structural transition.
I just want to ask you on the flows part, Navneet, just one thing, right? FIs have sold about $14 billion worth of stock this year. Local money is about, what, $55 billion?
Yeah.
Which is coming, right? 14 versus 55.
So since 2021, mutual funds have invested $165 billion.
But just this year, I just want to say, what is, I've always wondered, $55 billion, it's, you know...
Of local money.
Of local money versus $14 billion of selling. And the market
is still flat. But that's also paper, right?
So what's the equilibrium where?
I think the two things. You are seeing the flows from the domestic investors. On other side, you are seeing two things. One is that foreigners have sold, and number two, you have seen the primary supply.
Oh.
So there's a supply from private equity and venture capital looking for exits. You have some of the promoters diluting. You have companies raising capital, which is not bad. I mean, how a trade will happen, Prashant. Ek koi buy kar raha hai, somebody has to sell that, and that's where the supply is coming.
Sometimes
next several years, when people tell me with this liquidity, market can go to any level, it won't happen. There is so much of supply waiting to come to the market. So at every rise, with every incremental liquidity, you will see the supply.
Which is also a good thing, because otherwise you can have a blowout top.
It's a great thing. The universe is expanding, and Indian markets, I mean, we are already fourth largest in the world. In fact, that would be critical. It is not only the price appreciation, but the new paper that will keep coming. And the new businesses. You have to meet the younger entrepreneurs to...
Urban Company, I mean, they filed their prospectus just now. I mean, absolutely new business.
So many of them.
So much. So we don't track it, but so much money is going into newer unlisted entities.
Absolutely.
I mean, old public market investors have all become venture capital investors, because there is, I mean, the breadth of the companies which are out there. So absolutely take your point. Nigel.
Navneet, but good to have you in the studio, Navneet. And, you know, I'm giving your driver company as well. I'm keeping the SIPs going. And, you know, and my staff as well at home, you know, advise them, just keep it going. And now they're saying, sir, should be. So that's what we're doing. That's all great. You know, that liquidity, the entire evolution of this equity cult here in India, that's very, very positive reading. But in the near term, this Trump tariff is clearly, you know, is ruined sentiment. As is, we were underperforming. Now, do you think the markets can still continue to hold on even if we don't get a breakthrough on the tariffs? Or do you think in the next couple of months, the market believes that, yes, we'll get some kind of a breakthrough? Because the GST cut obviously is going to be positive. It's going to help. But I think the single most, you know, the biggest factor right now that can bring back the positive sentiment will have to be some easing on tariffs. Do you agree? Or do you think the markets can climb the wall?
It's not only that. I think we are in a world which is so uncertain that the only thing I can say with certainty is continuity of uncertainty. We really don't know which way the year is going to end. So it's very difficult to predict, Nigel, in next few months where the markets would be. Where a known we know, known unknown we know, but unknown can come from anywhere. You look at last 5 years, the way they have come. What I think that the market wisdom is telling us that in spite of all of these negative news, if markets have held on, it is not only about the liquidity. The market wisdom is telling you that India is a country which is growing at a rate higher than China. Our inflation is lower than Japan. Our current account deficit, fiscal deficit, and public debt levels as a percentage of GDP are lower than America. And our foreign exchange reserves are higher than most of the developed markets in the world. And you are seeing from a $2,500 per capita a clear view for the next several years that with ease of living and the ease of doing business over a period of time with entrepreneurship and a conducive policy environment, you are going to see a consistent long-term growth. This is my view. This is, I think, the market wisdom is saying. And this has brought down the volatility of the market also. With kind of erratic news flow we had, market should have been a lot more volatile earlier. He talked about the FPI numbers. Imagine like a couple of $1 billion, what it would have done at a stock level and at a market level. So it is not only about the liquidity, but I think the policy prudence, I think the agile execution, I think it's the effective communication, and I think the way we are navigating the global geopolitics, it's
you know,
commendable.
Navneet, you said it, you know, and having a problem is one thing, but the kind of monetary support, policy support, as well as now the fiscal policy support, you know, acknowledging the problem and dealing with it is important as well.
So look at last few months, what we have done. We have cut interest rates more than what anybody expected. Now we are going to do GST cut, which nobody was expecting till few days back. And we have done the income tax cut, personal income tax cut. Now, all of this should lead to what I talked about, wedding economy, winter economy, and the festival economy.
So eventually, I mean, they say that...
In the near term, but structurally in the long run. Yeah.
So eventually they say that, you know, the food for any bull market is liquidity and it's decent earnings. I mean, listed companies with decent earnings growth. Now, given all that you mentioned, GST and the monetary stimulus, etc., Because when we talk to foreign investors as well, we were speaking to one yesterday. That's their only grouse. They're looking at China very closely. They've started going back to China. Now, God knows if it's short term or long term, because nobody wants to miss out. When a market is up 20%, everybody wonders, oh, did I miss it? So they're looking at China very carefully, but they're saying, India, forget the tariff issue, forget Trump and 50%. Your earnings are very anemic. So do you see something changing here?
I will say one thing. They're all the grouse against China for 2 years.
Yeah,
Nobody wanted to go there.
Absolutely.
The markets were really cheap and they have done well.
Yeah.
Surprised positively on policy and markets were really cheap. Money has gone there. I know it's up almost like 40% in last 1 year or so.
And it's all local Chinese money again, which has driven the market higher.
Also the foreigner money as well, which has taken the market higher. I think in India, maybe for a variety of reasons, just that, as I said earlier, that when you have so much of local money coming in, somebody has to supply the paper and they have supplied. The domestic ownership has been inching up, the foreign ownership has been coming down. So a larger part of India is owned by Indians, which is what our wish was in 90s and 2000s. Absolutely. Finally, it's good in my lifetime, I'm seeing that.
No, but from, absolutely, so that's on the flows picture, but from the earnings perspective, I wanted to know if your team is convinced about all the estimates out there, because we've made a habit of starting at 13-14%, then we come down to 8-9%, then we end lower. But is your team of fund managers now convinced that there is a turnaround in the works?
Of course, I think some of these sectors, particularly like consumption we talked about, we are seeing a positive sentiment. And of course, everybody is now looking for the move on the GST in next few days. But you made a very important point. I think ultimately stock price is nothing but the slave of the earning power of the underlying company. And these valuations can only sustain if you see the earnings growth. If you see higher economic growth and we see the higher earnings growth, after 3 years of 20% CAGR in earnings growth, we have seen maybe a period of consolidation last 5 quarters, maybe another quarter or two. From next year onwards, earnings have to fire. They have to be at least in line with nominal GDP growth, if not more, for the next couple of years. And I think that's what the hope is. The one thing I would say is that in last couple of years, market is paying a lot of premium to free cash flow, to, let's say, becoming asset light, to higher return on capital employed. But looking at the opportunities in the world, I think we need to invest more. My message to corporate India will be, you need to take a little bit of more risk. And investors also. Today, investors, I think are shying away from anything which is like a large...
I think that is happening now. That is happening.
There's an acquisition announced, the stock starts falling.
Yeah, it's changing at the margin, which is positive. Look at US. Amazon is going to invest $100 billion this year. You look at like larger companies going to invest in 80, 90, $100 billion. We won't do that. I think we have frugal engineering in India. We'll take advantage of all the investment they will make, like what we did in 90s. We were the best.
In terms of...
I mean, the beneficiary of the investment in fiber and the network and everything.
Navneet, one business I want to talk about is the asset management business. And HDFC Mutual Fund, of course, was always this behemoth. And I think you built it up in an even larger scale, larger way. Stocks done phenomenally well. I was just, last week or 2 weeks back, I was just joking that there are only 2-3 sectors where you have visibility of very strong sort of earnings growth, durable earnings growth. And asset management companies were one of them. I just wanted your thoughts. Is it, as a space, do you think it'll... the runway is higher and long as you see it?
Well, the policy environment is supportive. I think the overall macroeconomic backdrop is very supportive for us. The point I made on the country transforming into a nation of investors is very supportive. This is a structural trend. 75 lakh crores of AUM is around $800 billion. This is where United States was in 1988. By the end of 90s, they were close to $4 or $5 trillion. So that has been the trajectory that we have seen in the US. In many ways, the trajectory of asset management industry in India in terms of growth potential can be looked at as what has happened in US in 80s, 90s, 2000s. And these are like very early days. It's just that we have got 55 million investors, so a long, long way to go.
And you got newer instruments also being introduced, right? I mean,
absolutely, yeah. I mean, so it's been, and over the next couple of weeks, we'll be starting the whole new series with you in terms of how do we take the mutual fund Sahiya message to the masses, and how do we convert the awareness into the action. The why we still have only 55 million investors, that number can multiply. Why the average ticket size of SIP is less than 3,000 rupees, that number can multiply. multiply. So still long way to go.
And just, to ask in terms of size and scale and opportunity, you've laid it out. We have now, I think, over 50 asset management companies in the country, right? And more keep filing, more keep coming in. How will that impact the growth and the competitive dynamics, the spends on whether it's distribution, etc.? And what do you expect on that trend? More and more AMCs coming up.
25 years back, when industry was less than 1 lakh crore, there were 30 players.
Okay. So then
it hasn't really increased that much. It is also maybe, I would say, confirmation of our positive view on the industry, that a lot of people think this industry has a huge runway for growth. So that's positive. We welcome everyone. But the second point you asked was on...
what that will do in terms of just operating costs, the hunt for talent, distribution expenses, because I'm sure it does get competitive.
I think many things. The asset managers who have made it big, what they've done right is, I think, delivering a great experience to the investors in terms of investor performance. I think they have investment management, risk management, and product management capability, which is world class, and at the same time, it is backed by the franchise, governance, and the distribution network. This is what we have built painstakingly.
So space for all, absolutely. So Diwali is coming. The bumper GST announcements have been made. Anything else from the government, from the Reserve Bank? Any other Diwali or New Year bonanza?
I think they have they have pumped in a lot of liquidity. The CRR cut will also enhance the overall liquidity, particularly in the busy season for the credit growth. I think what everybody is looking at, that RBI has done whatever it can. They've taken the horse to the water now, can't make it drink. I think the supportive environment, what the government is doing in terms of GST, in terms of some of the other measures, and what I think what we are doing on the geopolitical side to kind of like build up newer relationships. Tomorrow, Singapore PM is in India. What we are doing with Japan, China, Russia, many other countries, and some of the FTAs have been signed. And I read the front page today, like Commerce Minister had mentioned that the US-India may not be too far. So,
Navneet, great interaction, and come more often, I must say. Really charge all of us up. And
it's so positive now.
The dose is needed once in a while.
don't fight against the might of 1 billion people.
Whoa.
Billion and a half. Billion and a half. So thank you very much, Navneet. Appreciate you joining us, and lovely interaction, as always.